Hi everybody, Jim Arroyo here. It's good to be back in the studio and get some videos out for you guys. We got a lot of stuff to cover over the next several weeks. Of course, we're in a major election cycle. So who are we exactly? For you new folks, we are the Oath Keepers of Yavapai County and the Yavapai County Preparedness Team. We represent the largest active group of Oath Keepers in the United States, and YCPT, of course, is our corporate status and our structure. So if you guys ever have any questions, the phone number will appear on the video, and you can always go to our website at ycpt.org. So what are we going to talk about today? Well, this is something that's on everybody's mind, I'm sure, is the economy. What is going on really behind the scenes? Here is the problem. The economic collapse scenario is something that Oath Keepers wargamed out years ago. That was one of the first things we ever talked about. And it's something that the average person just kind of glazes over. They get the deer in the headlights look. Economics is for nerds kind of thing, and no one wants to really pay any attention to it until their bank collapses and they have a problem. So this being one of the first war games we ever did, we put a lot of effort into this to try to help you guys figure out what is that going to look like. And that's really the first question of the CPT program. That's what this is on my hat, by the way. That's the Community Preparedness Team logo. That was the initial program for Oath Keepers. And then we developed the Yavapai County Preparedness Team, which we're now nationwide with YCPT and all that good stuff. So anyway, what does an economic collapse look like? This is not something the average American even understands because they've never really been through one unless you were born and grew up back during the Depression. Then you know exactly what things look like when it goes sideways. So you end up with bank runs, you end up with bank failures, you end up with a complete dollar devaluation, which is really what we're concerned with, and it ends up with a whole new monetary system. And this is something that even a lot of Americans that are alive today remember back in the 70s when we went off the gold standard and Richard Nixon changed everything back in 1971. That's back when they used to issue coinage, which we call pre-1965 coins. Anything dated 64 and earlier was 90% silver. Well, after that, they changed it and they just went to half dollars for the next 5 or 6 years, and they were 40% silver. And then eventually they weren't made out of silver at all. So that was a change of our money system. So it's not anything really unusual. It can happen at any point in time. What else could we be looking at? How about crypto? Some of you guys are into Bitcoin, Dogecoin, Ethereum, whatever. You're into cryptocurrency. And you're hearing the government talk more and more about possibly going to a cryptocurrency. Well, guess what? A cryptocurrency, which is, of course, going to be government controlled. It's not going to be an independent, autonomous thing like Bitcoin is allegedly independent. It really isn't. But if the government is going to issue a cryptocurrency, they damn well are going to control it. They're not going to just allow you to willy-nilly do whatever you want. They'll monitor everything. So those are some of the things that you can be looking forward to in a complete economic collapse. And the only reason the United States government is talking about a central bank digital currency, which is fully controlled by the government, that's not going to be independent, is because they know what's coming. When the dollar completely collapses and devalues, what do? Normally they print new money, but that's actually very expensive. You got to make all new plates, you got to have new paper, you got to start all over. And they may not want to do that. So the government started talking about a CBDC, central bank digital currency. Well, the Congress came along and said, yeah, I don't think so. You guys may have seen that in the media. It was out there. If you're not paying attention to this stuff, it's going to come back and bite you hard. So the Congress actually had a hearing and said, no, we're not going to get involved with that because the government's concept of a central bank digital currency is a Chinese system. It is based on a social credit score. The way this works is you have your money in the bank is going to be converted to digital, and it'll be a central bank. There will be no other banks handling this. It'll all be done through one entity, which is going to be the Federal Reserve. And once they do that, they'll initiate a social credit system like they do in China, and your social credit score determines whether or not you can buy, sell, trade, travel, whatever. Everything is restricted and controlled by that. You stand up here like I am and I say anything about the government, there goes my social credit score. If I do it again, it goes away completely, and now I don't have access to any money whatsoever. So that's what that is all about. It's not good, and the Congress knows it. They held hearings. They threw it out in a heartbeat. It doesn't mean that the government won't do it anyway. If there's going to be a complete collapse, then the government's going to take drastic measures and just tell Congress to go pound sand, and they'll do what they're going to do. So the next thing we need to be concerned with is the BRCS nation. Now, this is something I teach classes on. I talk with people all the time. We do have now in our organization what we call the Precious Metals Team, which deals with gold and silver. And we talk about this stuff all the time. And for those that don't understand the term BRCS, this is all over the internet. If you guys aren't paying attention to internet media and learning about this, you're going to get caught with your pants down big time. BRCS is BRICS, stands for Brazil, Russia, India, China, and South Africa. Those are 5 countries that have come together to form their own economic union. That has now changed. They've now added 5 more countries. It has literally doubled. It may have been 6 because there was another one pending, including Saudi Arabia. Here's the problem. The BRCS nations will have the largest population base of the entire globe. If you think about it, China, India, and Russia account right there by itself more than 2/3 of the population of the planet. 2/3. You add in the other countries that just added in, they're over 50%, and now 159 countries want to join the BRCS because they no longer have faith in the U.S. system and the U.S. dollar, because we have abused our, how do I want to put it, our ability to handle finances around the globe by sanctioning countries and taking their money away from them. That's too much power for one country to have. In a way, I don't blame BRCS one iota for what they're doing. I would do the same thing. If the United States took my bank account, I'd be a little ticked off and I'd want to do something about it. Well, of course, we've sanctioned Russia, we've sanctioned other countries out there, and they're tired of it. We've weaponized the dollar. Not to mention the petrodollar, or the world reserve currency, which was agreed upon at the Bretton Woods Agreement back in 1944. All of that's going out the window. For the first time recently in the last year, oil was traded for something other than the US dollar. And the Saudis are taking the Chinese yuan, they're taking the Indian rupee, and other countries are stepping up and saying, hey, we want to do business in our own currency, which will help strengthen their currency. So why wouldn't they do it? But here's the deal. The BRCS nations are hell-bent for glory on destroying the U.S. economy. And now trading for oil in other countries' currencies, that's a huge deal right now if you follow any kind of global economics. Because people think that, oh, that's something they're doing overseas or in other countries. How does that affect me? Well, we are, if you remember back in the Clinton administration, they were talking about a global economy. Folks, we've been a global economy. One guy sneezes in another country, this guy over here catches the cold. That's how it works. Everybody's interconnected. So now, if they're going to say, well, we really don't want to do business in US dollars, and why would they not? Well, because it's going to end up going to zero. It's not going to be worth anything. So they're going to dump their dollars. So the bottom line is, what can you do now? And why is this relevant to you? Because if the US economy crashes, that can lead to other scenarios that we have trained for in our organization, like the war game that I wrote, which was civil unrest, civil war. Also, what tends to trigger global wars? World War III, which we're already in, just a lot of people don't have any clue that it's already begun. But economics. Remember, when the Japanese attacked Pearl Harbor, there was a reason for that. And most people don't even know the history behind it. It was because we put an oil embargo on them and we crippled their economy and sanctioned them basically. So they said, okay, fine, watch this. And they attacked. What else could they do but go to war? And that's what happens with countries. You do this enough to some people and they get a little unhappy and they start loading magazines and they're coming after you. Okay? So the bottom line is, how can a a country go into a hyperinflationary period where it completely destroys the value of the dollar? Well, there's really two ways for that to happen. One is pretty common. Everybody understands what happened in places like Zimbabwe, the Weimar Republic in Germany, Hungary, any of the other countries that went into a hyperinflation. They hit the printing presses and they started to print money. Well, anytime you print too much money, you start devaluing it to the point where literally wheelbarrows full of cash to buy a loaf of bread is not out of the question. It's already happened. But there is another way, and most people aren't paying attention to this. Our U.S. Treasury bonds, they're about to lower the interest rates, which means they're going to make less money on their investment, and they're going to want to dump them because they realize that to strengthen our own stock market and to try to strengthen our economy, which it's not going to work. They just announced that there is possibly going to be a 25 basis point reduction in the interest rate, which is 0.25%. That could be more, but they could do it again in several months. But what that's going to do is cause an inflationary period. So if all of these countries decide, you know what, we've been investing in U.S. Treasuries because it was a good investment, and the largest holder of U.S. debt was China, that's no more. In fact, China's dumping theirs at a rapid pace right now. They're getting out of U.S. Treasuries. Who else? Well, Japan was the second highest. They now hold the highest amount of U.S. Treasuries, and they're starting to dump them, and other countries are dumping them. So what's going to happen if the dollar starts to tank and the interest rates start going too low? These people are going to dump dollars back into the United States, flood the place with currency, and there's another hyperinflation right there. So you end up with the same result. So what can you do about that? All of this is not speculation. This is not conspiracy theory. This is a foregone conclusion. It's already underway. They're going to collapse the dollar. How do you prepare yourself for that? Well, it's real simple. You've got to protect your monetary assets as best you can. And there's a couple of ways of doing that. You can invest in real estate. I would not recommend the stock market. And once again, we're going to put this out constantly. We are not financial planners. We are not financial advisors. We're not CPAs. You need to do your own research. All we are is analysts and speculators on what can happen based on current events. And a lot of us are involved in, we are stackers, we're investors, we're collectors. And just real quick, I'll go over the difference in those three because there's three types of people that collect gold and silver. Your investors usually like the high-end numismatic, or they invest in large quantities, or sometimes ETFs like exchange-traded funds in gold or silver, mining stocks, things like that. So those are your investors. Then you have your collectors, which collect the high-end, high-quality, collectible grade coins, which are worth a lot more money than just a simple 1 ounce silver coin or a 1 ounce gold coin. And they usually spend, many, many thousands of dollars over the normal value because it's a collectible. Then you have what we call stackers, okay? Personally, I'm a stacker, and all of the friends I deal with are stackers. What that means is we want the most amount of metal we can get for the least amount of money. And we're looking at collecting things like pre-1965 silver coins, dimes, quarters, and halves. We're collecting silver rounds, which looks like a coin, but it is not minted by a government. It's minted by a private mint, but it has intrinsic value because it's 1 ounce of 0.999 or 4 nines fine silver. Then you get into the high-end coins, for example, the U.S. Silver Eagle, which is probably the most sought-after silver coin out there. And these are things we recommend you have to help protect your assets. Now, as Lynette Zhang puts out all the time, if you don't hold it, you don't own it. So you don't want to have your gold in an IRA if you can help it. You want to have the physical metal in your possession, in a gun safe, protected in your own location. All right? And that's important because without having it on hand, you may not have access to it. So the idea is to have a portion of your portfolio. Minimum has always been 10%. If you're smart at this stage of the game, 15, 20, 25% of your portfolio, it might be a wise idea to have that in something physical to help protect it. Remember, silver is designed to be used for barter and trade. Gold is designed to protect your wealth. In the event there is a hyperinflation, the metals go in proportion with that. The dollar collapses, the metals go up. If you want to find other ways of tracking this, simple, go on the computer, plug in the dollar index. Okay? What does the dollar index look like? It's called DXY on the computer. So the dollar index is the measure of U.S. currency's value against other currencies. That is reducing every day. We're watching that go down, and it's dropped a lot. That's why metals are starting to go up. Gold hit an all-time high of $2,500 and 20 some odd, $2,522 was, I think, the highest it's ever been. So we just hit another record high. Gold is too expensive to buy, in my opinion. Silver is a great buy because it's still undervalued. So I'm going to go into more details on this. I want to get you guys up to speed. We do have on our MeWe page a gold and silver section. Just go to MeWe.com. Sign up if you're not a part of it. Go to Yavapai County Preparedness Team and then click on groups, and you'll see gold and silver info. Click on that. We have a lot of documents we've produced that'll help answer a lot of questions, or you can just call me direct at the phone number. All right, guys, that's what I got for you. More to follow on this. Pay attention. This is coming. It's already happening. All right, you guys take care, and we'll catch you on the next one.